Welcome to the BNB Investing Podcast for real estate investors. Fix and flippers and realtors exploring investment options with Airbnbs and short-term rentals through acquisition, leasing, or management to generate consistent monthly revenue. Join us for a chat with experienced and successful short-term rental investors to hear their story of how they got started and created wealth by building scalable businesses. We also explore various service providers and lenders that help make our businesses more efficient and maximize revenue in this awesome sharing economy. Welcome your host, Rich Monroe.
Hey everyone, Rich Monroe here with BNB Investing Group. Thanks for jumping on this week. I'm super excited to kind of do a deep dive today on self-directed IRAs and being able to invest in real estate. I've got a good friend of mine on with us, Reneika Lightbourne from Advanta IRA, and we're going to dig into some questions and talk about this strategy by using your self-directed IRA to, basically not have too many taxes on your profits. And Reneika, thank you so much for spending time with us today. If you give us a little bit of your background.
Yes, thank you so much, Rich, for first of all the opportunity to have me come in and speak and knowledge share with your group. I'm excited. Again, I'm Reneika Lightbourne. I've been with Advanta as an employee for about 6 years, but I'm also an Advanta client. So this is something that I strongly advocate. I kind of got reintroduced to the concept once I started my real estate journey, and I just kind of sensed that, hey, this is the path I want to take. So it's been a fruitful journey so far.
All right, awesome. Yeah, so I actually also used my self-directed IRA actually when I first got started in real estate, and I invested in tax lien properties. And that's really what I was able to, from the corporate world, had quite a bit of money saved up in a 401k, but I used that money basically to kind of prove out the tax lien model and was able to really just ramp it up. And so, I probably bought about maybe 4 or 5 different properties with my self-directed IRA. And, instead of, you're basically taking money that you've already paid taxes on, let's say it's $100,000, and then self-directing and controlling what you invest in and having the ability to reinvest those returns and then have that money there available to pull out when you retire, and basically pushing your profits forward. And so I did that in the beginning. I bought about 350 properties eventually through that model. And that's really what got me started in real estate is doing that. And so how did you use your self-directed IRA?
Yeah, very similar. I wanted to get into investing. I've always had an interest in business and finance, and just being around other real estate investors. They kind of probe and say, hey, this is definitely a strategy you should consider. Like you, I tried different real estate. I did a fix and flip with the group. I did some tax lien investing. So I tried subject to strategies. I always partnered with other senior investors just because I was a newbie to allow me to kind of mitigate. But at the time I was using my retirement account. I just started using a portion of it. So I'm like, okay, well, let me just, to your point, test this theory out to make sure it makes sense, to make sure I understand it. And, it's been, again, almost 8 or 9 years I've been using it. But essentially, real estate was where I originally started self-directing, and then ultimately, transition into doing some other type of alternative investments that we can certainly touch on. But real estate has been the core foundation for me when it comes to, using old 401ks to diversify.
Okay, very cool. And, with tax lien investing, I was doing probably a 20% return if the property redeemed and we didn't take it. And then it was probably 30 to 40% returns. And so that strategy was great to use with the self-directed because you essentially just keep growing that money and keep reinvesting. And you're essentially, negating having to pay taxes on that pot of money. So it makes sense.
That's exactly right. With the traditional, it's, the income, the earnings come back into your account tax-deferred or tax-free, depending if you have a traditional or Roth. But certainly both accounts based on your specific scenario would work. But obviously with the Roth, and that's the account I personally have, the earnings would be tax-free as long as if I held that account for 5 years and, once I reached the retirement age of 59 and a half.
Okay. And so let's talk a little bit about the different types of assets that you can invest with a self-directed IRA.
Okay, yeah. Well, first and foremost, most self-directed clients, or let me just explain what a self-directed IRA, I know you touched on it. It just means for you as the account owner, you have complete control over your retirement funds. You're going to have complete control over the investment decisions. It essentially gives you the option to invest outside of, stocks and bonds. Most of our clients use IRA funds to invest in real estate. Obviously, short-term rentals have seen significant growth over the past, 5-10 years. But you can invest in fix and flips. You can certainly we have clients that do notes and mortgages. It's near limitless in terms of what's on the table for you. So whether that's investing in precious metals, we've seen an increase in cryptocurrency as of late. Oil and gas have been popular over the past few years, but the only two things I would say the IRS say that you cannot invest in is life insurance and collectibles. Outside of that, you have complete discretion to get creative. But again, real estate has been the bread and butter for most of our clients.
Okay, and I think we have a slide that kind of talks to, here, I'll put that on the screen, to some of the different types of investments that you're eligible to use your self-directed IRA for. Like you mentioned, the fix and flips, apartments, real estate, rentals, mortgages, notes, private placements, precious metals, cryptocurrency, syndications, and go ahead.
No, I was going to say, again, rental real estate, whether it's short-term, mid-term, long-term, you can do option contracts as well. You can get really creative. We've seen some creative deals over the years. Most investors, if they're doing real estate, it's either a rental or it's more so passive where they're investing in a multifamily syndication style opportunity.
Okay, great. And one of the questions one of my students had was, if I'm looking at an investment and let's say it's a $50,000 minimum requirement to invest in that particular strategy. If I had 30,000 myself directed and I had 20,000 sitting in my savings account, am I able to use that towards that investment?
Absolutely. So the IRS does allow you to partner your IRA with personal funds or other investors. So essentially, in that scenario, if her IRA is putting in X amount of dollars and she's putting in money personally, that's perfectly fine. The key thing to remember there is, whatever the IRA puts in, it gets back. So if the IRA put in 60% of the money, 80% of the money, whatever percentage it puts in, it's responsible for getting back in terms of the profit returns and paying its share of the expenses. But absolutely, you can certainly partner personal funds and IRA funds. You just want to make sure it's structured to where it's in partnership, where you're not using the IRA to fund your personal deal. You're showing, hey, I'm a buyer. My IRA is also a buyer on this particular deal.
Okay, and then does Advanta help keep track of that, on a go-forward basis? How does that typically work?
Yeah, so as the administrator, as the custodian, we do all of the record keeping, all of the IRS reporting. For us, we don't give you any, tax or legal advice. We don't find the investment for you. You identify the opportunity, but when it comes with the actual record keeping, we handle that for you. Everything is done based on your direction, but in terms of tracking the inflow and outflows, yes, we handle that as the custodian. Another thing too, with our clients, you'll have online portal with us. So just know you can always, reach out to your assigned person. You can log into your account and, upload an invoice or a bill that needs to be taken care of.
All right, very cool. And let's walk through like an example, right? So I've got a corporate job and I'm no longer employed there. And I guess that's the first question that I have, right? So if I've got let's say it's $100,000, and historically that's been in a 401k, I've kind of had a mixture of, mutual funds and stocks that I've used to, get a return on. A year ago, I left that job. That's kind of like a perfect position to be able to say, well, I'd like to get that transferred into a self-directed IRA, correct?
Yes. So there's 3 ways to fund the account. And in that scenario, having an old 401k, you can certainly move it over into an IRA with us. The process is pretty straightforward, pretty seamless. But yes, you're able to move a portion or all of it. You have a complete autonomy in terms of how much you want to move over. But essentially, step one would be filling out the paperwork to get your account open. We can do that relatively quick within 24 business hours. Sometimes it's same day. And then essentially, if it's an old employer plan, and a lot of people typically have old 401ks just sitting idle and don't know that they have the option to do this. But essentially, if it's an old employer plan, you have to reach out to that plan provider. So whether it's the ADP of the world or Fidelity's, you just tell them you want to move X amount of dollars from your old 401k into an IRA, a self-directed IRA with us. We'll provide you the information in terms of what to tell them, but essentially they direct a check to us, or they're directed to you, and you redirect it to Advance to be deposited into your account. So that's step two, the funding part of it. And then step three is once your account is open and funded, you're ready to rock and roll. You can go do your next deal.
All right, very cool. And just to be crystal clear, so if I'm currently employed at that employer, I'm typically not able to push it into a portion of it or some of it into a self-directed, correct?
It just depends. In most cases, no. So if you're currently employed and you're under the age of 59 and a half, 59 and a half is the retirement age per the IRS. If you're not yet 59 and a half, most times they'll tell you no, because that's IRS industry standard. You can certainly ask if they allow you to move a portion of it to do like an in-service rollover, in-service transfer. If they say yes, you move whatever portion. But if they tell you no, that's okay. Don't be alarmed. Sometimes we have clients where they have, left an old job and they roll that old employer plan into their new current employer plan. Well, they can certainly move the old employer portion out of it. But if it's just a current employer plan and you're not 59 and a half, unfortunately, in most cases, they'll tell you no.
Okay, I mean, that makes sense. And then for another case, let's say I don't have a company or corporate job and I don't have a current 401k or a retirement account, but I'm self-employed. Is there a way for me to start putting money aside and building my own self-directed IRA from scratch?
Absolutely. Especially for real estate investors or real estate professionals, if you have the option, if you're self-employed or you're a contractor 1099, you can also adequately save for a retirement account, and a solo 401k, to your point, is one of the best vehicles to do that. So it gives you the ability to, put in higher dollar amounts. I think for 2025, if you're under the age of 50, you can put possibly up to 70,000. So again, a good amount that you can, pretty much get started with if you're just starting brand new and you're self-employed. You have the option to, mitigate and avoid UDFI tax with a solo 401k. You have the option to have a Roth component to your 401k. But essentially, yes, a solo 401k is designed specifically for entrepreneurs and business owners who want to actively save for retirement as well.
All right. So if I have up to 70,000 per year, is that right?
Currently for 2025, if you're over the age of starting this year with the Secure Act 2.0, not to get too far down the rabbit hole, if you're between the ages of 60 and 63, you possibly have the option to put up to 81,000, as long as you can show that, that's what you have, that earned income through your business. Because essentially with the solo 401k, you're contributing twice. You're contributing as an employee, but you're also matching as the employer. When you combine the two, that gives you the ability to have those high dollar amounts compared to, a traditional Roth IRA.
So would I technically be paying taxes on that 70,000 for that tax year? Is that how it works?
So it depends. For the solo 401k, if you contribute as an employee, most times it's usually tax deferred, but you have the option to do Roth. If you do a Roth component, if you do tax deferred, meaning pre-tax, then obviously you're getting a tax break at that point. You'll pay taxes later. If you elect to have your employee portion as a Roth, you're saying, hey, you know what? I'm paying my taxes now because I have the intent of actively growing this account to where those distributions eventually will be tax-free. And then the employer match, previously before Secure 2.0, most times, well, all of the times, the employer match was also, tax deferred. So the business would get a tax break in that sense. But now you have the option to have your employer match be Roth, be after tax dollars. So again, it's a great way to mix and match pre-tax and post-tax dollars.
Okay. And what, through your self-directed IRA that you got started 8 or 9 years ago, what's been your average return from doing self-directed investments?
It varies. I have a Roth account. When I first started with real estate, again, I purposefully, strategically always only invested with senior investors. So someone like yourself who's very knowledgeable, who, experience different, whether the market's up or down, you can at least protect and hedge the investment. So I strategically, connected with a mentor and only invested with people who I know could protect my nest egg. And also, too, it gave me an opportunity to learn. So I wasn't getting the majority share of the deal, but I was getting, consistent returns and also learning as I go. But over the years, I've expanded into different things. Yes, real estate is still my core investment choice, but I've really dig into digital assets like cryptocurrency has done well for me personally in my retirement account. I've done private equities, precious metals. I know people are talking about precious metals. I was fortunate to buy it 6 years ago. So obviously that appreciation there. But I tell clients, regardless of where you are, like if you have an interest in something, maybe, real estate, whether it's passively investing in one of the deals that you have, as long as you have an interest or you have an understanding of it, just start there. You have complete control over diversifying outside of, again, traditional stocks and bonds. Yes, have some money in the market if you choose to. I don't pit self-directing against the traditional markets, but you want to diversify. So just pick a lane, find something that you're interested in, and then ultimately the returns are eventually going to be there. Educate yourself, do your due diligence, but find something that you feel comfortable in investing in.
All right. And then let's talk a little bit about the rules that are involved in terms of, your involvement in those investments as it pertains to using your self-directed funds to invest.
Okay, so when it comes to self-directing, again, there's only two things the IRS say that you cannot invest in: life insurance, collectibles being antique art, wine, stamps, coins. Obviously, some coins are allowed with precious metals as long as it meets the IRS criteria. So those are pretty straightforward. The other restriction, the major restriction that typically comes in that you have to be mindful of is the IRA. You can't do any self-dealing. So the IRS is not allowed to do self-dealing, meaning every investment that you make is for investment purposes only. You own your retirement account, yes. You control your retirement account, yes. But you have to make sure that you're not, personally benefiting from it today. Your IRA cannot invest with someone who's considered a disqualified person, meaning yourself, your spouse, your lineal ascendants or descendants. And I want to kind of clarify that because I know it could be a mouthful. You can partner with anyone. Your IRA can partner with yourself. So we talked about that earlier. But in terms of your IRA transacting with a disqualified person, meaning your IRA can't be on the opposite side of the table from yourself or your spouse or your parents or your grandparents, children or grandchildren, or even your business. Meaning, hey, you can't take money from your IRA and lend to yourself, or vice versa. Or you can, if your IRA owns a piece of rental property, you can't, lease it out to your daughter or, have mom and dad stay in that property. So you can partner with them as long as you're all on the same side of the table, but essentially you can't be on the opposite sides of the table from certain disqualified persons.
Okay. And then you also can't provide a service like a property
Yes.
manager or a contractor to that particular investment.
No, you can't do any of the sweat equity. You can oversee the project, you decide what needs to get done. You don't have to hire a property manager if your IRA has rental property, but you can't do any of the sweat equity. So you're not the one that's mowing the lawn that, for a rental property your IRA owns, or you're not the one that's providing the cleaning service for one of your short-term rentals. You would have to hire it out to a non-disqualified person or a third party. If you're doing, let's just say you're doing renovations on a particular property, you can decide what needs to get done. You can say, hey, this wall needs to go, but you're not the one that's, swinging the hammer. So you just have to be mindful of that.
Okay. But if I had a tax lien strategy or a foreclosure strategy and I wanted to use that money to go to the auction and bid on a property and then buy that property, that's allowed. It's even though I'm the one doing the labor to do that.
Yeah,
So
you can do that. Absolutely, that's allowed. So you want to be mindful of the IRA is responsible for paying its related expenses, meaning like if you have property taxes or you got to pay a contractor, the IRA is responsible for paying that. But in terms of going to a tax sale auction, you're not personally benefiting in that. You're not paying yourself a fee. I know a lot of times real estate agents would say, hey, can I be the agent on this particular property that my IRA is buying? You're not allowed to be compensated in that regard. No.
Got it. What else is something that we would need to know going into this that is kind of rule based and that you have to be careful about?
So one of the beauties of being a client of Advanta is you do have a dedicated account manager with us. So someone who's going to be with you for the life of your account. So you don't have to be an expert. Yes, know the IRS rules, but you don't have to be an expert when it comes to self-direction. That's our core focus. So when you're about to do a deal, you can certainly reach out to us and talk through a scenario to kind of refresh on, hey, this is what I'm thinking. This is my thought process, just so you get clarity on the do's and the don'ts. But you just want to make sure that you're mindful of that the IRA, everything is in benefit of the IRA. So everything's at arm's length. You're not wanting to, let me give you an example. So you can't lend money to mom and dad. No, that's not allowed. You can lend money to sister or brother, but what you don't want to do is lend it to sister and then sister turn around and lend it to a family member. So again, you want to make sure everything is in the best interest of the retirement account, because in that example, the IRS is going to look at what's your intent. Was your intent always to get the money to mom and dad? Or let's just say your IRA owns a rental property, you're leasing it out to a cousin or a friend, perfectly fine, but you want to make sure you're leasing it out to them at fair market value. If the rental rate in that area is, $1,500 or $2,000, you don't want to lease it out to them for $500 or $1,000 because you're not doing what's in the best interest of the retirement account. So you just want to make sure that you're mindful of the rules, that any money leaving the retirement account is pretty much essentially for the best interest of the retirement account. The returns coming back flows back into the retirement account. So that's the main focus: money in, money out for the IRA.
So you basically have to treat it as though it's a standalone business account, and you've got to have anything that derives income from that investment has to go back into that account.
Exactly. So you own your retirement account. Yes, you control it. Yes, nothing happens until you say it does, but you have to think of your IRA as its own separate person, its own separate entity. You want to do what's in the best interest of that. If you were to do something, inadvertent, prohibited, even if it was, without not knowing, if it was inadvertent and if it was found out that you possibly did something prohibited in an IRA scenario, you essentially, your IRA can be disqualified, meaning the IRS can force you to pretty much distribute everything from that retirement account, and you can be subject to taxes and penalties. So you want to be mindful of, knowing what the IRS rules are. A solo 401k, you do have a little bit more flexibility in that. Yes, you don't do anything prohibited, but if you were to do something prohibited in a solo 401k compared to an IRA, they're just going to look at that specific transaction for you to fix or rectify. In an IRA, it's a lot more harsher, meaning if you do something prohibited, then you essentially disqualify your entire IRA.
Okay. Is there anything that prevents you from investing internationally?
No, we have clients that use their IRAs to go overseas. I've had a client invest in South America, Portugal, different parts of Europe, but you can essentially use your IRA. The only thing I would tell you to be mindful of when investing overseas is whatever the local jurisdiction that you're investing in, they may have specific requirements, meaning they may require that you use an entity or an LLC equivalent to their standards to purchase that investment, that property.
Got it. And is there anything else from a CPA or a tax with your accountant that you have to do that's, that you have to watch out for with a self-directed IRA? Or does Advanta really just handle everything for you?
So we don't give you any tax advice. Obviously, before you make any investment, you want to make sure you have conversations with your circle of influence, your financial advisors, your CPAs. Obviously, when you're making contributions, being mindful of your contributions. Obviously, with self-directed IRA, you still have the same tax benefits, meaning your gains are tax free. You're not subject to any capital gains when you're selling a property. The one thing that do come into play specifically for real estate investing transactions is If you use leverage in an IRA scenario, then UDFI tax may apply. So that's a frequent question for real estate investors. If you're buying, let's just say someone had all of the money to buy the property, but they didn't want to use all of their dollars to tie up in one property. They wanted to take out a loan. Yes, they can do a loan, a non-recourse loan. But when you use leverage in that scenario in an IRA, not a solo 401k, your IRA would be subject to UDFI tax, unrelated debt finance income tax. So obviously working with a good CPA who's aware of how UDFI tax work can help you structure it to where you can possibly get some deductions on that. As you repay that non-recourse loan, not you, the IRA is taking out the loan, they're not looking at you personally, but as that loan is repaid, that UDFI tax goes away.
Okay, but that's only if you're getting a loan or doing leverage with that investment.
Yes, and a solo 401k UDFI tax does not apply. UBIT still applies, unrelated business income tax. Again, that's different. But if you're using leverage in a solo 401k, which is another reason as to why real estate professionals like it, UDFI tax doesn't apply. So just having the conversations with your CPA, throughout the year about different strategies that you're doing. Obviously, again, being in contact with your client account manager here about different investment that you're considering, just to see what your possible tax questions may be related to that investment.
So I guess a lot of the changes with the 100% bonus depreciation doesn't really apply for a self-directed IRA because you're not able to use that. If you do a transaction, you're not able to take advantage of that because you've already got that falling for your self-directed.
Right? Exactly, it's already tax sheltered. So
got it. All right. So if I'm an investor and I'm interested in possibly, first of all, rolling it into a self-directed IRA and then investing, what's a good way to look at different options for investment strategies, or how would you recommend you go about looking at different opportunities to possibly invest in?
I would tell clients they want to kind of educate themselves. Like a lot of times, this is a new concept for most people who they may have seen something online or heard it from a friend or they're part of a real estate group. But I would say educate yourself. Advanta IRA, we're a great resource for you. We have a lot of practitioners and experts who come on our platform. I know, Rich, you've been on our platform a couple of times. So whatever you're interested in, let's just say if it's real estate specific, maybe get connected with the real estate group, or again, you can go to our YouTube channel or go to our website and look at the different real estate opportunities out there, whether that's a short-term rental or boutique hotel style investing, or maybe it's notes and mortgages, or it could be a tax lien. I know we have clients who actively invest in tax liens and tax deeds. So there's different things based on your preference to invest in. If you're just passive investor, maybe you look at syndication, multifamily opportunities, or crowdfunding opportunities that it allows you to kind of have some skin in the game while you educate yourself and get started.
Cool. And I know Advanta does host some good webinars throughout the year, as well as the monthly Pitch and Prosper meeting that's on the last Friday of every month. And that's usually a good opportunity to jump on and see what different folks are potentially offering as investment opportunities as well.
Absolutely. We do 2 webinars a week, typically on a Tuesday and a Friday. Tuesday and a Thursday. And then we have, to your point, Pitch, Promote, Prosper last Friday of every month, barring it doesn't interfere with the holidays. So we actually have one this week. You're welcome to go to our events page and sign up. Great networking, haves and one style. You get a chance to kind of see what other opportunities out there, something that may be of interest to you. Again, you still have to do your due diligence, but at least it kind of give you exposure to what other investors are doing.
Yeah, absolutely. So I know we had quite a few people jump on. Feel free to throw any questions in the comments. I know that the way that we're broadcasting this doesn't necessarily go directly to being able to do it on my Facebook group, but I think you can do it on the Facebook page if you have any questions in mind, and we can try to answer it here towards the end. So I'm sure a lot of people are probably curious about, the cost involved and the fee structure, and let's say you do have an account you want to roll over. What's involved with the fees to do that? And then on an ongoing basis, what does the fee structure look like as well?
Great question. I do want to reference in terms of Advanter, we're not the highest in the industry in terms of cost. We're not the lowest. Our focus is giving you, the client, that concierge style service. For anyone who is on this call and you've reached out and you do want to open up an account, I know specifically for B&B Investing Group or Rich Referrals, you do get your opening application fee of $50 waived, so that's no charge to you. But essentially, a client wanting to open up an account with us, there's three main charges. That's the opening fee of $50. Again, that's waived for anyone who mentions they heard about this through Rich. So you have the opening fee, then you have a transaction fee. Depending on what you're investing in, it's either $95 or $145 if it's physical, tangible real estate. If you're just passively investing in one of Rich opportunities where you're, again, a passive investor, you're just lending money or you're doing a note of some sort, it's a $95 transaction fee. And then, of course, we have to do all of the record keeping, all of the IRS reporting on the back end. There's an annual record keeping for that. We give our clients typically two options. You can toggle between the two, but typically it's either $295 or $345 for option one. So those are the core fees. On our fee schedule, you might see other fees, but in most cases it doesn't apply. It only applies if, for example, if somebody want us to overnight something and there's an express mail fee, but if you don't use it, it doesn't apply. If there is a wire fee, we incur that, we pass it on to you. If you don't use it, it doesn't apply.
Okay, and then obviously, you guys handle, once we get the account transferred over and it's at Advanta, as you're looking at investment opportunities, you basically have to fund out of that Advanta account for that particular investment, whether you're, so for example, when I was doing tax liens, I would have to, get $20,000, for example, in different denomination cashier's checks. So I would pull that out of Advanta, go to the bank and get $20,000 in cashier's checks and then go to the auction. The results of the auction happened. Maybe I was successful with 15,000 of it. So I would have to send the tax lien certificate of the 15,000 and then I'd have to put the $5,000 back in the account. So you logistically have to, like we talked about, have everything flow in and out of that account. Now, in the example of a tax lien, as I'm getting redemptions, so some of those tax lien properties, people redeem them, and in the state of Georgia, you get a 20% return for that. And so when those get redeemed and the 20% is included, that money has to then be deposited directly back in the Advanta account. But ultimately, the whole advantage here is, like we've talked about, is, as you go through whatever strategy you're doing from an investment standpoint, once you retire, that money is there basically to be able to support you tax-free because you've already paid the taxes up front. And now that you've grown it into a much larger pot, you can use those funds without having any other further tax consequence.
That's correct. And I want to reference too, with tax lien or fix and flippers, if you're more active, meaning you're wheeling and dealing, there is a strategy inside of the self-directed account where you do what's called checkbook control, LLC IRA. So there's two ways to invest using a self-directed IRA. You can do it directly in the IRA where you tell Advanta, send the money when it needs to go, pay this bill, do this, or send you cashier's check when you need to go to a tax sale auction. Or there's something where you can do it indirectly through an LLC. This is a new LLC. The IRA owns it. You're the manager of it. Essentially, you open up a bank account for the LLC. You have Advanta send the money to that LLC's bank account. And in that case, if you're going to a tax sale auction, you don't have to have Advanta, send you a cashier's check. You can just go to the county sale. You win a bid, have the bank provide you a cashier's check, or if you have a debit card or checks, hence why it's called checkbook. So that's another way as well. One of the beauties with checkbook control, I know typically more advanced or seasoned investors typically like that strategy just because it gives you greater control. But let's just say it's a holiday, Advanta's closed, you have checkbook control, you don't have to wait for us to do a deal. It gives you that greater flexibility.
Yeah, that makes sense. And I guess that works well too if you're doing like a rehab project, for example, and you got to do draws for the contractors so that you kind of have everything under that LLC account.
Yes, the only thing you don't want to do with a checkbook control is get a credit card because, again, it's owned by the IRA as a separate entity. You cannot guarantee any loans or lines, but you can get a debit card or you can get checks. But certainly fix and flippers, you need to go to Home Depot to, buy supplies for your project. Absolutely.
Okay. Now, we talked about the cost of a rollover, rolling your 401k over. Is it a similar cost structure if I were to get started and open up a new self-directed IRA as a self-employed person?
So the solo 401k, the price point is very similar. Obviously, we do have three options for solo 401ks. It's a little bit more than the IRAs. The solo 401k, we have a do-it-yourself plan to where you're just leasing our plan document, and that's just $300 a year. So that's, again, very nominal. Again, our focus is to get you as investors to get started on your self-directed journey, whether that's through an IRA or through a solo 401k if you're eligible. So again, we're not the highest in the industry, but obviously we know the type of quality of service that we provide. We have an enhanced version where Advanta handles everything. That's more of our premium product. But again, we have clients that they prefer to pay for that just because then they know that the type of service that comes with it. So we do have options that fit every type of investor, whether you want to just, you want to be hands-on and you handle the do-it-yourself, or you want the most cost-effective option, we have that available for you, or you want a premium style service to where, hey, I just want to focus on finding the investments, Advanta, you do what you do best, which is, the paperwork and record keeping and tracking everything, doing the IRS reporting, especially with solo 401ks. There's the 5,500 easy that's required once your account reaches a certain threshold. So sometimes that can be overwhelming for someone.
Okay, got it. And I mean, the answer to this question is probably fairly biased, but I know there's a couple of different companies that specialize in what you guys do. What's differentiating Advanta from the other options that are out there?
Yes, I'm biased. Obviously, like for me, I'm an Advanta IRA client first. And when I got started, I asked around, I looked at different companies. I obviously talked with my peers, other investors, and who they were recommending and who they had their accounts with. So my mentor, he had an account with Advanta, but I still checked out other companies. And obviously, I love my account manager, meaning when I'm ready to do something, I know exactly who to reach out to. It kind of really streamlined that process. We built up a rapport over the years. Obviously, now as a professional, as an employee of Advanta, I get to provide that same level of service. And we take great pride in just making sure that, hey, you're not just a number to us. If you pick up a phone and you reach Advanta, you're going to talk to a direct person, but also you're going to talk to your assigned account manager, or you know who to reach out to. It's not like a call center style. So we're a small company. We've been in business for about 22 plus years, 15,000 plus active clients. Again, we're not the biggest in the industry, but we take great pride in being one of the most premier concierge self-service company in the industry.
All right, very cool. And then what's the best way for folks to get a hold of you or get in touch with you to schedule a call to go over more details if they have a 401k that they're interested in rolling over and have more questions for you?
I would say go to advantaira.com. You can actually schedule a consultation directly with me. You can find my direct phone number and also my email there. So just go to our website and then you'll have the option to schedule a consultation directly with me.
All right, perfect. I'll put that in the comments in the show notes so that people know how to access it. Is there anything else that we haven't touched on, Reneika, that you think would be helpful for our folks?
I just want to let people know that, start wherever you feel comfortable. You don't have to be, whether you have $1 or $1 million, start wherever you feel comfortable. You want to make sure that that self-direction, think of it like a greenhouse. You're going to plant the seeds that give you the financial freedom that you want. Yes, you don't have to be the expert when it comes to self-direction. That's what we're here for. But no one's going to be a better steward of your money than you, in that you have to be an active participant, and an active participant is being, starting taking action. And again, you have the experts like Rich who have offerings or opportunities for you to, kind of get familiar with and maybe put some of your dollars to work with him. Or you have, an interest in, let's just say, investing in a private note or something like that. There's ways you can find different deals that's out there. But I would just say, get started, take action, even if it's just starting small.
Great advice. Reneika, thank you so much for taking the time today. This has been very informative. I really appreciate it. And just as a reminder for you guys that are watching, if you are trying to start in short-term rentals and build a scalable business, that's something that B&B Investing Group can help you with. Feel free to reach out to me directly to have a quick strategy call to see what your goals and objectives are and see how we might be able to either point you in the right direction or help out. Reneika, thank you so much again. And I'll definitely get your information down below so folks can reach out if they have more questions for you.
Wonderful. Thank you so much, Rich. I appreciate your time. Thank you.
All right. Take care.
Thanks for jumping on the BNB Investing Podcast this week. Please click on the subscribe and like button below. For more trainings, property tours, and content, you can join my BNB Investing Facebook group by clicking below. If you are ready to grow your short-term rental portfolio and maximize your monthly income, you can click on the link below to schedule a quick strategy call with Rich or someone from his team to see how we can help or point you in the right direction. Stay tuned for our next episode and hope to see you on the BNB Investing Group podcast.